Hey guys, so I get the question a lot, what's going on in the Minnesota multifamily real estate market? So I created this video to educate you on information that you may have missed. Information in this market report was sourced from Marcus & Millichap's research services and their second quarter 2021 market report. And I'm just going to break down what the research analyst Benjamin Kunde presented in this report. Looking at a 12-month period ending the second quarter of 2021, 8,863 new units were added to the Metro's apartment supply. Builders finalized roughly about 2,600 more units during the past year ending in the second quarter than in the previous 12-month period. As of July, nearly 15,200 additional rentals had broken ground. In the past 4 quarters, the Burnsville, Apple Valley, and the Uptown St. Louis Park submarkets had a stock enlargement greater than 5%. In the same 12-month period, there was a 30 basis point increase in vacancy year over year. Availability in the metro tightened from 4.7% in March to 4% in June as net absorptions in the second quarter surpassed 4,000 units for the first time in 5 years. Vacancies in the suburbs rose 20 basis points year over year to 3.7%, contrasting the national suburban 70 basis point decline. According to this report, in the Twin Cities, we see a 0.3% decrease in the average effective rent year over year. Stunted by a 4.2% annual reduction in Class A rates, the Metro's mean effective monthly rent went down to $1,368 in June, and Class A rates grew 2% in the second quarter. The average rent in the downtown Minneapolis University area abated in each of the past 5 quarters, down 14.5% during that span. The report goes on to say that rising home ownership costs refocus residential demand on upper-tier apartments. As the pandemic hurdles begin to dissipate, apartment segments more impeded by the health crisis and surge in unemployment are turning the corner as jobs are added to the economy and the economy reopens. In the second quarter, Class A vacancies declined by 120 basis points. Prior to this, availability in this tier had risen 6 consecutive quarters. The stronger performance can be partially attributed to the single-family housing market. Minneapolis and St. Paul's median home prices were up nearly 23% year over year in June, which in turn has bolstered upper-tier apartments' appeal as cost-effective alternatives. The recovery in the downtown locales is also gaining traction as desirable urban amenities like shops and entertainment have reopened and more young adults are finding jobs in these settings. Central St. Paul posted a vacancy contraction of 280 basis points in the second quarter, while downtown Minneapolis had an 80 basis point ease. Large construction pipelines may temper the pace of recovery. Apartment completions in the metro will notch a 20-year high in 2021, which could present an additional obstacle in the recoveries of a few submarkets. The fastest annual inventory expansion of 4.5% will take place in South Minneapolis Richfield, a locale where vacancy was up year over year in the second quarter. Supply in North Minneapolis will grow by more than 4% this year, though the availability here was down from June 2020. Local stock enlargements will exceed 3% in the downtown Minneapolis University area and Uptown St. Louis Park as well, places where vacancy was up at least 100 basis points year over year. Now I want to go over what the market report says on the outlook of the multifamily market in 2021. When it comes to employment, following the reduction of 194,700 personnel in 2020, the market will grow its worker count by 6.1% this year. The unemployment rate was 4% in June, up 2.9% before the pandemic, but still well below the national level. Completions in 2021 will grow the metro inventory by 2.8% as the annual delivery volume exceeds the trailing 5-year average by about 3,000 units. By comparison, supply in the U.S. will expand by 2.1% this year. Greater demand for rentals will be equalized by the influx of new supply, keeping the vacancy rate firm at 4.2% in 2021. Availability in the Minneapolis-St. Paul area has risen each of the prior 2 years, including a 90 basis point jump in 2020. With the rents, the average monthly effective rent will move up to $1,400 as the market takes positive strides to make up lost ground after rent fell by 0.8% in 2020. Strengthening demand coupled with a wave of new luxury apartments will provide a boost, according to this report. Minneapolis-St. Paul remains a top priority for investors as historically strong fundamentals outweigh near-term hurdles. Deal flow during the past 12 months ended in June jumped by one of the largest margins among U.S. markets. The expanded buyer pool contributed to assets trading for higher prices and lower cap rates on average. The mean per unit cost was $148,000, while the average cap rate for assets trading during the past 4 quarters ended in June was 5.5%. Assets in the outlying St. Paul locale, which encapsulates neighborhoods north of the city core between Interstate 94 and State Highway 36, traded 4 times as often in the past 4 quarters as in the previous year. This was primarily attributed to several large portfolio deals of Class C apartments. Lower tier complexes here trade below the market average at roughly $120,000 per unit. Investor buyers concentrating on higher quality buildings are setting their sights on western suburbs like Maple Grove, Plymouth, and Shakopee. Entry costs here for Class A or Class B apartments often exceed $150,000 per unit, with top tier properties sometimes doubling that price. And that wraps it up for my Minnesota multifamily real estate market report. This is not intended to be a forecast of future events, and this is not intended to provide specific investment advice, and is not to be considered as investment advice. But you can schedule a one-on-one with me and we can discuss your specific situation. I hope this information has provided some type of value to you, and if you or somebody you know that's looking to buy, sell, or invest into multifamily real estate, please pass along my information and let them know that you do know a real estate agent. Thanks for watching.